Hi, I'm Jeff Ray, your host for Economic Outlook. Thanks for joining us as we dig into the trends, the people, and the forces shaping our regional economy. On today's episode, we're taking a broader look beyond our backyard to the national and global economies and how they ripple through our local communities. I'll sit down with PNC Chief Economist Gus Faucher to talk inflation, interest rates, job growth, and what we might expect in the months ahead. That conversation is coming up next. The U.S. economy has been through a whirlwind over the past few years. Pandemic disruptions, record inflation, interest rate hikes, supply chain snarls, shifting labor markets, and most recently, market instability due to tariff uncertainties. While some signs point towards stabilization, questions remain about what's next and how it impacts the day-to-day realities for businesses and workers in our region. To help us make sense of it all, we're turning to a leading voice in the field. Joining me today is Gus Faucher, the Chief Economist at PNC Financial Services. With deep experience analyzing economic trends and forecasting what lies ahead, Gus will help us connect the dots between the national trends and the local impacts. Welcome, Gus.
Thank you very much. Pleasure to be here.
Gus, it's great to have you back here again. Really appreciate you joining us. You've become a trusted source on the economy, and we thought, given just kind of all the conversation about it everywhere, we thought it'd be helpful to have you back again. Gus, just to maybe level set at the beginning, remind us of just kind of your role at PNC and kind of what you do in this in the economist space there.
So I'm the chief economist at PNC, and what that means is I'm forecasting where the U.S. economy is going to be going over the next few years. I look at the data that come in, I look at what we're seeing in terms of federal government spending policy and what the Federal Reserve is doing with interest rates. Now I'm looking at tariffs and some of the tariffs that the Trump administration is talking about and figuring out how the U.S. economy is going to perform. What's going to happen to the job market? What's going to happen with economic growth? What's going to happen with interest rates? What's going to happen with inflation?
Great, thank you. And we've appreciated sort of your kind of honest insight and the look in your crystal ball sometimes to help better understand some of that. So Gus, let's just start kind of high level. Talk to us a little bit about just the kind of the national economy, sort of the state of the economy, what's strong, what's concerning. Give us a little insight there.
So we just recently got data on gross domestic product. That's the size of the U.S. economy. It actually fell slightly in the first quarter of 2025 by less than 1%. It contracted because we brought in a lot of imports from abroad. So businesses were trying to get ahead of potentially higher tariffs from the Trump administration, and we did get those in April. So they were importing a lot in January, February, and March. That subtracted from economic growth, and we saw the overall economy contract slightly. That being said, I think generally the economy is in good shape in early 2025. And in particular, the labor market looks very good. We've added about 150,000 jobs per month on average so far this year. The unemployment rate is around 4.2%. It's a little higher than it was a couple of years ago, but still historically low. Consumers continue to increase their spending. They're buying a lot. They're feeling comfortable, or at least they were before the tariffs came on. And so we're starting from a pretty good spot at this point. But I do think that the tariffs are causing some big disruptions in the U.S. economy right now.
Great. Gus, let's stay in the tariff space for a second. Maybe help the average viewer better understand a little bit of, kind of what's happening in that tariff space and how it could ultimately impact them.
So first of all, tariffs are a tax. They're a tax on goods that we import into the United States from other countries. And so in early April, the Trump administration announced a new, much higher round of tariffs on many countries, most countries. Now, some of those tariffs have been dialed back, but when you look at the level of tariffs as of now, they're about 8 times higher than they were at the beginning of 2025. So that means that it's going to be more expensive for businesses to import goods from abroad, and they're going to pass these higher prices along to their customers. So that means we as consumers are going to pay higher prices for imported goods. Manufacturers, including those in northern Indiana that use imported goods in their production processes, they're going to pay more for that. And so it's going to increase prices across a wide variety of goods in the U.S. economy. And it's not just foreign goods. U.S. manufacturers will see that their competitors now face higher prices, so they may be inclined to raise their prices as well in order to increase their profit. So we're going to see higher prices for most manufactured goods in the United States as a result of tariffs, and that is going to be a drag. It does mean that if we as consumers are paying more for some goods, we have less money to spend on other things. Same thing with businesses. If they're paying more for imports, and they may have lower profits and may be less willing to invest or to hire.
Great. Gus, can you give us some maybe historical perspective on tariffs? Is this, I mean, this I think seems new to some people, but tariffs have been around for a long time too. Have you in your time seen something like this?
I have not. When you look at this historically, when you look at tariffs relative to the level of imports, these are the highest tariffs we've had in more than 75 years. So I'm not quite that old. Yeah. So it used to be back in the in the early part of the country, in the 19th century, tariffs were very high because that was an easy way for the government to collect tax revenue. And tariffs were viewed primarily as a revenue source. Now they're a function of trade policy. The Trump administration is concerned about the United States trade deficit, and so they want to make it more expensive to buy imported goods. So that's why they've raised tariffs. But we haven't seen tariffs at this level for 75, 100 years.
Right. So Gus, let's stay in the tariff space for a second. Talk for a second. One of the, I think the objectives I hear coming out from outside of Washington is we want to bring some manufacturing back here, and if we level this playing field, this will encourage folks. Is there a chance that that this will lead to greater success on the labor market or less unemployment? Will some companies bring production back as part of this?
I do think that we will see some countries increasing their manufacturing output in the United States, and they may hire more. Now, it's going to take a long time for them to build the facilities, find the workers, all of those types of things. And so we shouldn't expect to see an immediate increase in manufacturing employment. And then there are going to be other companies, other manufacturers, other non-manufacturing companies that are going to be hit by tariffs, and they're going to actually reduce employment. So I think the net effect on employment is likely to be minimal. I don't think it's going to do much to increase employment or decrease employment for that matter. But I do think that it is going to be a drag overall on the economy as consumers are paying higher prices for a lot of the goods that we're buying.
Great. And one last tariff question. So any advice, Gus, to business people who are watching this, that kind of maybe a small business person who's sort of seeing this, any advice on how to help weather kind of what's going on in the tariff space?
Yeah, what I think that they can do is they can redouble their efforts to make sure that they are searching for the lowest prices that are out there. They can talk with their distributors, see if they can import from countries that are subject to lower tariffs. So, for example, tariffs on China are very high right now. So maybe you can find a imported product coming in from another country that's less expensive than those from China, to talk with other companies that are located in the United States that perhaps aren't subject to tariffs. But I think for many businesses, it is going to be difficult for them, and they are going to face higher prices for many of the goods that they're buying.
Great. Gus, let's shift a little bit. Let's talk inflation a little bit. And I, again, maybe the national news doesn't always sort of get into the depth of the economy, right? They're talking about the price of eggs and whether it's up or down or gas or whatever. But talk generally about inflation and what's happening in the inflation space these days.
So we saw inflation slow dramatically over the past couple of years. So you go back to 2021 or 2022 when the economy was starting to reopen and we were buying a lot of things, and in particular, a lot of goods. We had been cooped up, we got stimulus funds, so we had more money to spend, so we were going out and purchasing a lot of things. And businesses couldn't keep up. They couldn't supply goods fast enough, and that allowed them to raise their prices. So we saw very high inflation in 2021, 2022, and then we had the Russian invasion of Ukraine and much higher energy prices. What we've seen since then over the past couple of years is that inflation has slowed. That doesn't mean that prices have fallen, It means that prices aren't going up as quickly now as they were a couple of years ago. So you go back to 2022, let's say, and prices in 2022 on average across all of the goods and services that we buy were about 7 or 8% higher than they had been a year earlier. Now, in early 2025, what we're seeing is inflation is closer to 2.5%, 3%. So prices have gone up by about 2.5% or 3% on average from where they were a year ago. It's a little bit higher for some things like housing and education and healthcare, a little bit lower. Energy prices have basically been flat or down slightly over the last year or so. But when you look at prices now, first thing is that they are still much higher than they were before the pandemic. They're about 25 or 30% higher than they were then, but they are going up more slowly now than they were a couple of years ago. So we say that inflation is slowing, and also inflation is still a little bit higher than the Federal Reserve would like. The Federal Reserve has set an inflation objective of around 2%. Inflation now is running somewhere closer to 2.5%, 3%. So the Fed still would like to see a bit of a slowing in inflation. And then with tariffs are going to raise a lot of prices, right? We're going to see higher prices for imported goods. We're going to see higher prices for some domestically manufactured goods where the domestic producers are going to take advantage of tariffs to raise their prices. So I do expect to see a slight acceleration in inflation, particularly for goods, over the next 6 months or so as the impact of those tariffs works their way through the economy.
Great. Gus, I think back to the 2000s, the national media began to descend upon our area here a little bit, especially Elkhart, because that's the bellwether that kind of predicts what's happening sort of in the economy and such. Just this last week, one of the national news had to do a story from Elkhart, kind of talking, is there a recession coming, some of that. So talk a little bit about, just maybe some local perspective, things like RVs and such, which we depend on very heavily to drive our local economy, how things like that are performing in today's economy.
Yeah, I think when you look at RVs, when you look at durable goods more generally, so these are big ticket items like cars and appliances, a lot of which are produced in Indiana, in northern Indiana. You think about it, if you go out and buy an RV, you're not going to pay cash for it most of the time. You're going to finance it. And with the Federal Reserve raising interest rates over the past few years, it's a lot more expensive to finance an RV now than it was back in 2021 when interest rates were much lower. So that's been a drag on heavy manufacturing. It's been a drag on RVs in particular in the northern Indiana economy. Now, interest rates are down a little bit over the past 6, 9 months or so, but they're still a lot higher than they were a few years ago. And so that has been a bit of a drag, and we have seen a bit slower growth in Indiana, in northern Indiana, compared to the rest of the country because of the area's dependence on interest rate sensitive industries, heavy manufacturing, RVs in particular. I think we'll see the Fed probably cut rates later this year, so that may provide a little bit of a support to the industry. But on the other hand, consumers will be dealing with higher inflation from the tariffs, so that may make them a bit more reluctant to spend.
Great. Gus, when we've been together before, Gus, we've talked a little bit about the stock market, and I think Joe Public sometimes thinks the stock market is the strong indicator of what's happening on the economy, and sure, and obviously I think we're coming through one of the biggest losses months in a long time, which has people worried about their 401ks and some of that. Talk a little bit about just kind of stock market in relation to the economy and what's happening today.
Yeah, so a couple of things. First of which is that the stock market is forward-looking. It's not looking at conditions in May of 2025. It's looking at conditions towards the end of 2025 or in 2026. Investors are trying to figure out how corporations will be doing 6 months, 12 months, a couple of years down the road. There's no question but that the stock market responded very poorly to the tariffs that President Trump announced in April. There was an expectation that these tariffs would be a substantial drag on economic growth, that they would weigh on corporate profits. Now, as the administration has stepped back from some of those tariffs, we've seen stock prices come back somewhat. I would point out that, the decline that we saw in the stock market in the spring of 2025 We oftentimes see stock prices were down about 19% from their peak in February to where stock prices bottomed out in April, at least for now. We oftentimes see stock price declines of that magnitude without getting a recession. So we're still waiting to see what's going to happen to the economy, what's going to happen to the stock market. I do expect that we will see slower economic growth this year, but there are no indications that a recession is imminent. And in fact, some of the economic data are looking pretty solid. Consumers continue to spend, jobs continue to go up, and those are obviously positive signs for the economy going forward.
Great. And I appreciate you sharing that. I think some are ready to hit the panic button. Kind of why we wanted to talk today a little bit, because I think that there are some good indicators there. Let's talk the job side of things. You talked a little bit about unemployment, relatively stable and low. Labor market has been growing. Obviously, from a region, we're interested in that economy growing. We've seen some major investments in things like data centers and EV and some other things. But talk to us a little bit about just maybe industries even that are kind of driving economic growth, maybe some things that are real positives either for our region or for the U.S. as a whole on the job side of things.
Sure. So first of all, when we look at the unemployment rate nationally, it's pretty low. In Indiana, it's pretty low. It's a little bit higher in northern Indiana than it is in the rest of the state and in the U.S., but not noticeably so. And I think that the labor market generally remains pretty solid. When we look at job growth over the past couple of years, it's been concentrated primarily in service industries. So things like education, which is obviously very important for northern Indiana, healthcare, leisure hospitality services, those types of service industries. Construction employment has generally been going up. Manufacturing's been a little bit softer, as I mentioned. The economy has been dealing with higher rates, and in particular, that's a drag on manufacturing employment. But generally, job gains have been broad-based, but concentrated more in service industries. And I think that it is still a tight labor market in the United States, in Indiana, in northern Indiana. Perhaps not as tight as it was a few years ago, but as long as the economy continues to add jobs, that means that household incomes should be going up and consumer spending should be increasing.
Great. Thanks for that perspective. We've a lot of close attention on what's happening on the job side of things, here in particular. Gus, give us some. Can you give us some global perspective? I think we maybe talk a little bit about sort of global influences, maybe how other economies in the world are doing, and how those might influence what happens in the U.S.
Yeah. So just as in the United States, we dealt with high inflation, and then we had the Federal Reserve raising interest rates in the U.S., we saw the same situation globally. So when you look across the world, you had high inflation in most economies during the recovery from the pandemic. You saw central banks raising interest rates, the Bank of England, the European Central Bank, the Bank of Canada, in response to that high inflation. Now, like the Fed here in the US, we've seen those central banks cutting rates, but interest rates globally, not just in the US, but interest rates across the world now are a lot higher than they were back in 2021 or 2022. And that does mean that we have seen global economic growth slow as these economies have adjusted to higher interest rates. And then you add on the top of that the tariffs and the trade war that we're experiencing, and those are likely to hit other countries perhaps even harder than they would hit the United States. So you look, for example, at the Canadian economy. They're very dependent on manufacturing exports to the United States. So the tariffs that the Trump administration has imposed on Canada in particular, those are going to be a drag on the Canadian economy. And we've seen higher tariffs on goods coming in from the European Union, from Mexico, particularly from China, from the UK, all the countries across the globe. And so that does mean that global economic growth this year is likely to be a lot softer than it was in 2024. And that does increase the risk of a recession in the US economy. Now, we can have a global recession without a US recession, but that does mean that export growth in the United States is going to be weaker, economic growth in the United States is going to be weaker, and that makes us more vulnerable to some kind of shock. And then I would also point out that we're seeing, just as the United States has raised tariffs on imports from overseas, other countries in retaliation have raised their tariffs on US exports. And there are a lot of these businesses in northern Indiana that export all over the world. The higher tariffs that our trading partners are imposing are going to be a drag on those companies. And so that may offset some of the benefits if these companies are receiving them from higher US tariffs.
Yeah, I appreciate, my experience in terms of talking to some local folks, Canada in particular. So Michigan and Indiana are both really important Canada trading partners. And so there's been probably the most discussion I've heard is related to, kind of that US-Canada kind of relationship and what's going on there. Gus, let's look ahead a little bit, and I think you kind of touched briefly on, but business folks, our viewers are trying to think about kind of the rest of the year and what's ahead. You talked a little bit about, and again, not holding you to it, but obviously you're looking at a lot of data and information. Talk to us about kind of some of those key indicators you're watching and what you think is logical that could happen, in the U.S. economy as we get through the rest of 2025.
So first of all, let's consider first of all where we are, which is in the spring of 2025. What we call the hard economic data on the number of jobs, data on industrial output. Those numbers generally look pretty good. The labor market remains solid. We're watching initial claims for unemployment insurance. Those come out every Thursday for the preceding week, so those are a good real-time indicator of how the labor market is doing. There's been a little softness there lately, but still looking pretty good. So when you look at that hard economic data, often comes with a lag, but that's generally solid. What we're looking at and what's more concerning is what we call the soft data. Things like how are consumers feeling? How are businesses feeling? What are they saying? Anecdotal reports, things like that. And that type of data doesn't look as good. Now, there can often be a disconnect between the hard data and the soft data. A couple of years ago, consumers said that they weren't feeling very good, that they were anxious about the economy, but they continued to spend and the economy chugged along. So just because we've had some soft economic data that has come in worse than expected recently, that doesn't necessarily mean that the economy is in trouble. But we are going to be looking to see if we start to see some weakness in that hard data that matches what we're seeing in the soft data so far. And it's going to be interesting to see how that contradiction resolves itself and whether we do start to see some indications that the economy is softening as we head towards the middle of the year.
Great. Gus, as we get into our last 3 minutes or so, your role at PNC, you're, as an economist, you're helping business people who are part of the organization there make decisions and navigate, kind of what's going on. What advice would you share with business owners, with community, with kind of everyday Americans about navigating the economy?
Yeah, I mean, there's just a great deal of uncertainty out there. So we're not quite sure what tariffs they're going to be, how high they're going to be, how long they're going to be in place. And so I think I think people have turned more cautious, and that is certainly understandable given the current environment. You need to make a decision. Does it make sense to purchase something now, to make an investment now? Or do I think that if the tariff situation is resolved sometime over the next couple of months, the economy may be doing a little bit better. We may see some lower prices and so forth. So just a lot of uncertainty out there, but you need to look at your own personal circumstances. The other thing is not to panic. I think that the U.S. economy, when you look at it in early 2025, is still in okay shape. Obviously, I think that tariffs are going to be a drag, but that doesn't mean that we're necessarily going to get a recession this year. So the other point I would make is don't panic. That I think that there are some real strengths to the United States economy still, and that I think that over the longer run that the U.S. economy will continue to grow, will be creating more jobs, and we will see inflation slow a little bit further, not necessarily in 2025, but in 2026 as we adjust to the tariffs that are in place now.
Great. Maybe last question in our last minute or minute and a half or so. Talk a little bit about just people who want to know more, learn more. What are some of the best resources out there for people to better understand sort of economic conditions and how to look at some of those things?
Well, I mean, certainly I can refer to our website, which is pnc.com/economic reports. And so we have write-ups on all the data that come out. We have a U.S. economic outlook and so forth, so they can take a look at that. But, just look at a wide variety of sources, and not particularly from one particular ideology or another. I look at a wide variety of publications, whether it's the Wall Street Journal or the New York Times or the Economist magazine. So follow those types of things, and follow economists of different stripes. There are liberal economists, there are conservative economists. Nobody has a monopoly on the correct answer. So try to get your news from a wide variety of sources that give you diverse opinions, and then that will help you better understand what the economy is and how it's doing and how it's performing for all of us.
Gus, we're grateful. Thank you for your time today, for being with us. You present stuff in a really easy and understandable way. We're glad that you've graced us with your time to help us better understand that. So thank you for being here. Gus Faucher.
Thank you very much. Appreciate it.
That wraps up this edition of Economic Outlook. A special thank you to Gus Faucher for joining us and offering his valuable insight into the state of the economy and what lies ahead. Thanks for tuning in to PBS Michiana WNIT or listening to our podcast. Don't forget, you can catch all past episodes at WNIT.org, on YouTube, and on most major podcast platforms. Like us on Facebook, follow us on Twitter. I'm Jeff Ray. I'll see you next time.
This WNIT local production has been made possible in part by viewers like you. Thank you.